At some point in adulthood, many people reach a moment they thought would feel different. The paycheck is finally good. Not extraordinary, but solid. Enough that people around you say you're doing well. Enough that you stop worrying about every small expense. And yet, something feels off. Your financial progress feels slower than it should. Not harder, just stuck. Consider a common situation in the US or Europe. A young professional earns around $70,000 a year. After taxes, healthcare, and deductions, about $4,000 a month hits the bank. On paper, this is a good income, above average, comfortable. Then real life steps in. Rent or a mortgage takes about $1,400. A car payment or lease takes another $450. Insurance, fuel, and maintenance quietly add more. Student loans might still be there. Credit cards, even when used responsibly, take a few hundred a month. Subscriptions, phone plans, small lifestyle upgrades, dinners out, short trips, and suddenly most of that $4,000 is already gone before the month really begins. What's interesting is that none of this feels reckless. The apartment isn't luxury. The car isn't exotic. The spending feels reasonable, earned, and socially normal. This is where the hidden issue begins. A good salary doesn't just increase income, it changes expectations, yours and everyone else's. You're no longer expected to struggle, so your lifestyle adjusts upward almost automatically. You don't consciously decide to slow your financial progress, it just happens quietly through choices that come with higher fixed costs. Here's the simple math many people overlook. Before earning well, you might have had $500 left over each month. It wasn't much, but it was flexible. After earning more, you might save $800 a month. That sounds like progress, but now your commitments are larger, your margin for error is smaller, and your flexibility is gone. One job change, one health issue, one economic slowdown, and that comfortable setup becomes fragile. Psychologically, higher income creates a sense of safety that isn't fully real. When income rises, people relax their financial attention, not because they're careless, but because constant vigilance is exhausting. You track less closely, you question fewer upgrades, you assume things will keep working out. There's also a social layer. At higher income levels, spending becomes part of identity. The car you drive, the neighborhood you live in, how you travel, these signal stability and success. Letting go of them feels like moving backward, even if it would move you forward financially. Over time, the impact is subtle but serious. Wealth grows slowly, options disappear. You earn well, but your money doesn't work for you. The risk isn't poverty. The risk is becoming permanently dependent on a steady paycheck. Financially intelligent people tend to think differently. They don't treat raises as permission to upgrade life immediately. They treat them as leverage. They care less about appearances and more about flexibility. Their spending protects future freedom, not just present comfort. This isn't about living cheaply or denying enjoyment. It's about recognizing that the most dangerous financial phase isn't low income. It's when income is high enough to relax, but not high enough to absorb mistakes easily. Earning a good salary can slow your financial progress if it shifts your focus from resilience to comfort. Awareness alone changes that path, not overnight, not dramatically, but steadily, quietly, and realistically. If this perspective helped you think more clearly about money, consider liking the video or subscribing for more calm, rational discussions about long-term financial thinking.